Let's put the spotlight on Indian hotels. Puneet Chhatwal, Managing Director and CEO, in conversation with Nikunj Dalmia.
Well, it always gives me great pleasure to bring on board Mr. Puneet Chhatwal, Managing Director and CEO of Indian Hotels, to talk about really the remarkable turnaround story of Indian Hotel and what a what a great time it's been for the entire hotel/the hospitality industry. The sector is firing full cylinders, and within that, Indian Hotel, because of its brand, because of its efficiency and productivity, is clearly occupying all the center stage. So, Mr. Chhatwal, always a pleasure to have you on ET Now. Thank you for joining us. Last quarter, when we described your numbers, we used the word impressive. Before that, they were charged up. How would you describe, in your own terminology, numbers for the quarter gone by? Let me hear first your assessment, and then I'll come up with a follow-up question.
Thank you, Nikunj, for having us. The first important factor to keep in mind is that Q1 and Q2, and traditionally the first half of the year, has always been weak for the sector. But that is changing. In the last 5 quarters or 6 quarters, one can see that India, on a macro basis, is becoming a more 365-day destination versus being a destination dependent on only foreign arrivals, and a destination which works very well between October to March or the second half of the year. Having said that, October to March, that means Q3 and Q4, still remain the strongest quarters because of the way the marriage calendar works, the way the Christmas and the New Year and all the festivities work in Diwali. So I think Q3 has been traditionally and will continue to be the strongest quarter for the sector, and including for Indian hotels. I think what is interesting for us is to have gone beyond 1,500 CR in top line, posting a 17% increase on consolidated level, as most of our growth, as you know, is based on asset-light, fee-based business. If we were to take it at an enterprise level, which means a system-wide revenue, then we go even north of 20%. So I think all in all, that is very heartening, and we have been able to invest in the last quarter, and also will be doing this quarter, into our new businesses on marketing initiatives for Qmin, for Ama, putting a better structure in place, because these were just born during the pandemic and were based on incremental revenue and incremental cash flow model. And now the time has come to invest some amounts of money, and which we have been doing, and very, very excited to see the performance and contribution from these new businesses, including a very good story around very traditional business like TajSATS, or the turnaround in Ginger in terms of profitability. We all know that Taj was, is, and will remain the crown jewel, not just of Indian hotels, but of India. It will continue to contribute in a significant way. But if all these businesses start contributing, then the sum of the parts you will start seeing in the profit after tax, which also in this quarter went up by 30%. So I think all in all, as management, we are pleased with the result.
So let's understand first the big picture. First, the demand versus supply equation, what it means for the industry. And within that, if I look at the positioning of the Taj brand and revenue per night, the industry average is 4,200, you are commanding 6,500. So are you bullish on the growth, and are you confident that you will be able to command this premium irrespective of what the industry rates are?
Well, Nikunj, I think one thing is definitely clear, that demand is going to outpace supply, especially in the near term, because the supply will remain constrained. Not much went under construction during COVID or during the pandemic, and whatever goes into construction takes a long time, including our own projects. As I've communicated with you before, our flagship Ginger should have opened by now, but now it's opening in October or latest by November, depending on the monsoons in Santa Cruz. So I think that gives you higher occupancy and your ability to charge increases. So your average rate should increase. When you mention 6,500, it's a blend of the rates of all the brands. Obviously, Taj has the ability to charge much more. And the average of the industry which we have taken is also average across all brands. So I think all in all, having a RevPAR premium of almost 50% is there to stay, especially in some of our asset management initiatives that we have undertaken. Now our renovation is 95% complete for the Taj Mahal Hotel in Delhi, popularly known as Taj Mansingh. Very soon we'll be launching Taj or relaunching Taj Usha Kiran Palace. Ginger Santa Cruz, I already mentioned to you. The renovations in West End with the newly designed and planned chambers, which is going to come there, including our new restaurant concept. Loya will be opening in a few weeks. So there is a lot of activity around asset management initiatives on our iconic assets, as well as not like-for-like growth. We opened 5 hotels, another 15 are supposed to open in the next 3 quarters. And we opened 13 last year too. So I think all these initiatives slowly will keep adding to both the top line, to the margin expansion, and also benefit in times like this where demand outpaces supply in terms of the operating leverage of the owned assets.
So, Mr. Chhatwal, the second half is always better than the first half, something which you alluded to and has been the normal trend. But the exception this year is that you got the Cricket World Cup and you got the Miss World, pageant. These are 2 large events. And on top of that, there is going to be G20. Now, these are 3 factors which would be unusually large events and which certainly will add to the hotel demand. What could be the impact of these 3 factors in the second half of this year for Indian hotels?
Not just Indian hotels, I think for the sector, for everyone, it should help increase the demand, and with the supply remaining constrained, I think the second half should be an exceptional second half going forward. And obviously we know what cricket does in India, even if it's just IPL, and World Cup cricket is something very special. Miss World anyways, and we're already seeing the impact of G20. It's not just the G20, it's also the B20, and within various verticals, all the meetings that are happening. And as we have the largest footprint in India, the kickoff meeting started at one of our properties in Havelock, and the second one was in Udaipur, and the third one was at the Taj Mahal Palace and Tower in Mumbai, in Colaba. So I think we are very well positioned to get the direct benefit, but more importantly, Nikunj, the infrastructure investment that the government is doing. What was opened 2 days ago in Pragati Maidan, the launch of Jio in Mumbai, the opening of the convention center in Dwarka, all these additions to the infrastructure have a direct correlation in terms of demand in the sector. So I remain very optimistic that the demand will continue to increase because of the investment in the infrastructure, in terms of convention centers, in terms of railway networks, in terms of so many new airports coming under the project Udan. So I think all in all, it's a good timing and a very good correlation for hospitality to be indirect beneficiary of the key strategic moves that the government has made on the infrastructure investment.
So, will I be off the mark when I say that in the second half of this year, the ARR, the rates will see a uptick of 14-15% at least?
Nikunj, you can say that. I can't make that forward-looking statement, but I will happily accept if it's that number that you are saying or even higher, then it's very good for the sector, but I would not be able to make that comment.
Given that your margins for the quarter gone by, they were down, was this a function of more brand expense, more expenditure towards marketing and capex?
Firstly, it's marketing and capex. As an example, we had taken a strategic decision to rebrand all the all-day dining of Ginger properties wherever there was food and beverage into Cumin. So 20 of those have got done now. Obviously, last year in the Q1, we were just coming out of the third wave of Omicron, so there is an adjustment in the cost base. I think it would be fair to look at Q1 and Q2 together this year versus just the Q1 versus Q1. It's a good, healthy comparison. And some of the costs have obviously gone up because the inflation level is higher, and there is some monies, as I said, we needed to spend on the new businesses, which we have also guided during the Capital Market Day. But all in all, getting close to 30% EBITDA margin is a very healthy number, and our guidance under Ahvaan has been 33%. With the Q3 and Q4 yet to come, we think we are very much in line of the guidance that we have provided.
Mr. Chhatwal, if I speak to some of your peers, which is some of your hotel industry, other CEOs, they are also quite excited about the demand scenario and demand supply scenario for next 2 or 3 years. So my only fear is that if everyone is excited, so this year will be great, next year will be good, but then beyond that, could we be staring at a glut?
Well, I think that's a view which I would not like to share. I don't think my colleagues from the hotel sector would share that, because of all the things that I just mentioned. The investment in infrastructure is changing the landscape on how demand was generated in the past versus how it is today and what it will be in times ahead. So if you did not have the ability to host a convention for 2,000 people, then it was not possible. But in the next 2 to 3 years, in India, we will be having conventions of those sizes like they happened in the other parts of the world. So we cannot become, number 5, number 3 aspirational economy in the world and not have other businesses which lead to consumption, which lead to hospitality, which lead to food and beverage, and stay in isolation from that. So I think it's a move that, as I said, on the infrastructure development, that makes me extremely optimistic, and the role that increasingly India is playing on the global front is making India a more attractive destination going forward. And with the foreign tourist arrival, I think when you said we have G20, we have Miss World, we have the Cricket World Cup, we have still not reached the pre-COVID international arrivals in India. So I think once we get to all that, there is a very healthy demand generation possibilities which we have not seen at this level in the past.